Hi everyone, my name is Mary, and there's a pair that I'm particularly interested in for the week of April 10th, and that's the British pound to Australian dollar. Now, there are a couple of big economic reports that are coming out this week, possibly the most important reports of the month for these two pairs against other currencies and for this particular pair. One of them is the British pound consumer price index that's coming out on Tuesday. That's probably one of the most important reports for the month because the Bank of England is probably going to have to raise rates at some point this year. That's already priced into the market. It's expected that they're going to be raising rates because they have had inflation well above their target. The last inflation report was 4.4%. And despite the fact that the UK economy has been in a contraction, they're probably going to have to deal with this. So the only thing that's going to change that is if the consumer price index comes in below expectations, and if they don't have to raise rates because the inflation starts to decrease on its own. So if that happens, we could probably have a substantial move downward in the pound. And I'm looking at this particular pair because it's in a very long-term downward price trend. You can see that this is really going on for a number of years. It's close to 10 years that the true trend has been down. So we always want to go with the longest time frame possible to look at the trends. And a daily and weekly and monthly, they all show the same thing. And of course, the other part of this pair is the Australian dollar, and one of the reasons that this pair has been in a downward trend and the Australian dollar has really been on a tear compared to other currencies is incredibly strong growth coming from Australia, which is largely based on exports of commodities to China. And the Australian economy has really been on a roll. They've got incredible natural resource wealth there. They've got iron ore, coal, natural gas, all of these commodities, even diamonds, other types of minerals that have been exported to China during China's incredible industrialization boom. So unemployment has been low, and the Australian dollar has been faring extremely well particularly against the other currencies like the US dollar and the Japanese yen. And a lot of people have been trying to pick the top, myself included, and getting burned, and this is just a breakout chart pattern. It looks like it could go all the way up to $1.20. I don't think that's going to happen, and I think that the sterling Australian dollar is also going to be a buy at some point, but for this week I do favor the downside. And I think if you just look at what's going on here, we've had bearish crosses here. It looks like it's clinging to support here right around the 54.5 level, and this could break significantly lower if we saw the British pound consumer price index lower than expected, and it could also break lower if the Australian dollar continues to rally. So the Australian dollar will probably continue to rally at least for the beginning of the week, just because we're in an upward trend. We're in an upward trend on the stock market, we're in an upward trend on risk currencies, we're in an upward trend with the carry trade and gold and other commodities. And the Australian dollar moves in very close tandem to the stock markets and the commodities. So I have every reason to believe that that trend would continue, at least for the first 3 days of the week. The only thing that's really going to change that, and if anything's going to change the trend in the Australian dollar, it's going to be what's going to happen in China. If the Chinese economy slows dramatically, then the Australian economy will slow dramatically. And Australia's also had some other problems this year. They've had problems with flooding. Of course, there's also the situation in Japan, whereby a lot of Japanese factories have had to stop production due to the terrible, tragic tsunami. But nonetheless, the Australian dollar has been in a strong upward trend. And you can see, if you look at what's going to happen on Thursday, there are going to be big economic reports out from China, the GDP as well as the consumer price index. So if the GDP in China shows a big slowdown, probably have to be 2 or 3 percentage points slowdown, then you could see the Australian dollar take a big hit, in which case I would probably turn bullish on this pair, as well as want to short the Australian dollar to the US dollar. The other thing to consider is the fact is the Chinese consumer price index is still above their target, and the Chinese economy hasn't really slowed as much. Then there are going to be more rate increases, and eventually it will slow because eventually they'll get inflation under control. But going into the first few days of this week, I like the downside in the sterling Australian dollar. And you can see that it did make a pretty good pivot point here, right around 51.5, and that was at the beginning of the year, towards the end of 2010. So I'm going to be keeping an eye on it going forward because I think there's going to be a good buy in this particular currency over the next few months, and I would like to get in for a buy. But for right now, I think the trend and the bias are strongly to the downside. So it's going to be good to keep an eye on these economic reports. They're going to be big market movers. I'm going to look for a good level to short this one.